Hi, I'm Casey. I cover policy and regulation at Blockworks, and I'm with Sam Golden, who is the Director of Brand and Communications at Rootstock Labs. Thanks for being here.
Thank you for having me. Super exciting to be in New York as well. Hi, everyone in the audience. I know it's quite late on the first day. Thank you for sticking with us.
Sam, I wanted to start with something that you mentioned when we were talking off stage. You said that if gold and fiat is kind of like fiat is a layer 2 of gold. And that's kind of how you think of layer 2s on Bitcoin as like we like to call it digital gold. Can you kind of explain that and kind of get into what Rootstock's focus is there?
For sure. Yeah. I mean, it's like quite an old analogy now, like Bitcoin is digital gold, but I think it rings really true in terms of security, scarcity, and value. And for a long time, until the introduction of modern banking, gold was used for the means of transaction by everyday people. 16th century, 16th, 17th century introduction of like paper-based money kind of paved a new way for how gold was used as an asset. And I think we're seeing the same thing with digital assets here, where you've got Bitcoin as the digital gold, and now layers being built on top of Bitcoin that enable the additional functionalities that a fully fledged financial system need. Like, so payments is one, but there's so much more to a financial system: lending, borrowing, insurance, investments, savings. Not all of that can be enabled on Bitcoin on the base layer due to it being pretty expensive to transact with, not having much programmability. And so the layer 2s give Bitcoin the ability to expand beyond the store of value and into a fully fledged financial system. And at Rootstock, that's what we've been leading since 2018. So building a DeFi layer for Bitcoin that allows people to be able to do all the other stuff that you might want to do with Bitcoin as an asset.
Yeah, definitely. And I want to get into Bitcoin beyond a store of value. But, you know, given all those use cases, can you kind of give us a general overview of the current landscape of Bitcoin L2s? Where are we? How have we grown in the last year or so? Where do you see us going? What are you working on?
Yeah. So it's really interesting. Like the emergence of like Satoshi even referenced the idea of other blockchains sharing the like hashing power security of Bitcoin back in like 2010. And the early entrants into the market were people like Lightning Network, who basically make, as we just talked about, like this layer above Bitcoin. They make payments much faster, much cheaper based on Bitcoin. Around the same time, in Argentina, a few cypherpunks who are really focused on Bitcoin started thinking about their own economy, the capital controls and hyperinflation they were seeing, and took that to basically combine the programmability of Ethereum with Bitcoin security. And that's where Rootstock kind of emerged. And then over the last year, I think as a result of some tech advancements, things like Taproot, BitVM in the world of Bitcoin, and also like macroeconomic factors like the Bitcoin Strategic Reserve, ETFs, all this kind of stuff. There's been like a big wave of new entrants into the Bitcoin L2 market, which is good because it kind of validates the theory that we had that all roads lead back to Bitcoin at the end of the day. And now you're seeing kind of layers emerging on top of Bitcoin for everything. So Lightning Network, very focused on payments. Rootstock, the kind of DeFi layer for Bitcoin. And then you're seeing a lot of other networks coming out with specialisms in things like NFTs, collectibles, that kind of things, all kind of forming around this market. And as a result, we're also seeing a lot of venture capital funding coming back into the Bitcoin space as well, which is really interesting to see.
Yeah, I want to get back more into the kind of triggers that you mentioned with Bitcoin. You mentioned the strategic reserve, which is certainly a newer development. ETFs, which we got in the last year. What kind of in the last, we'll say the last 12 months, do you think kind of sparked a new interest in Bitcoin L2s, and how did that develop?
Yeah, I think like some of those factors played a role. I think there's also, and like at Rootstock Labs, we talk about our kind of purpose is making Bitcoin work for everyone. And I think a lot of people had started acquiring Bitcoin, either institutions holding it in a treasury or individuals, and they wanted to figure out how to turn it from a store of value to a productive asset. And so a lot of these opportunities emerged to do that. Like especially now, you're seeing the altcoin market kind of detaching from the Bitcoin price as a whole, and Bitcoin's remaining pretty consistent. Like it has dropped a little bit in the last few weeks, but compared to the kind of wider crypto market, it's held its own. And I think that comes as a result of more institutional adoption. One of the last panelists talked about MetaPlanet. There's also obviously MicroStrategy, taking Bitcoin as a pure part of their treasury as a business. You also have Strike as well, the same people doing that. And I think it's giving a lot of credibility to Bitcoin as an asset. And because of the security and scarcity of it, people are seeing it in the same way as gold and being like, okay, we can start using this for more than just a store of value. And that's what all of these layer 2 solutions allow for with Bitcoin. And maybe we can talk about it a bit later, but there's also trade-offs and trust assumptions with how you use your Bitcoin and put it to work in different ways.
Yeah, definitely. I mean, being at the Digital Asset Summit, it's definitely more of an institutional conference in terms of the crypto conference circuit. You mentioned institutions being able to put their Bitcoin to work beyond just, a store of value, beyond something that they have on their balance sheet. What are the challenges that institutions face when trying to get more into DeFi?
Yeah, there's a few big ones. I think number one is security, understanding you retain control of the asset. So making sure that if you've got Bitcoin, you want to earn yield on that Bitcoin. At the end of the day, you still have custody of that Bitcoin. Incredibly important, whether it's your own treasury or if you're working on your client's behalf to put that asset to work. I think obviously there's a big regulatory question. Different markets that we look around the world will have different regulatory frameworks for how Bitcoin and other assets are used. I think it's been great in the last few months to see more clarity in the United States in terms of regulation and this kind of thing, and pushing forward for clarity. Because a lot of the time, I think that's what people want. They want to have a list of rules they can look at and say, okay, I'm doing it by the book here. When there's kind of not that level of clarity is when people start not being clear on what they can actually do with their assets. So that's going to be increasingly important in the next year, is not just the United States, but around the world, more regulatory clarity around Bitcoin as an asset and the wider crypto market for those institutions then to understand, how can I harness these layers built on top of Bitcoin to put these assets to work, earn yield on them, maybe take a loan out against them, maybe issue some kind of tokenized bond to raise money for the business. There's lots of different ways that Bitcoin is starting to be used in that way. But I think institutions have to get comfortable with the security around how they want to put this Bitcoin to work. And then the other side is understanding the regulatory framework they're operating in and whether they can, what they can do, what's possible with the Bitcoin they hold.
I want to get more into security. I think that certainly is one of the biggest challenges for institutions. I'd love to hear kind of how you think about that as an issue, but also I think there's a big critique of sometimes security and decentralization not always existing in the best way, maybe sacrificing decentralization to get more security. How does Rootstock think about that and kind of balance those issues?
Yeah, I mean, that is one of the biggest questions. I think decentralization is a weird concept because there's no real end goal. We always talk about being on a path of progressive decentralization. I think in a lot of projects adopt kind of decentralization theater, this idea that things are fully decentralized and there's no centralized control. But there's always going to be points that can be improved and further decentralized. And that's kind of over the last kind of decade since Rootstock's white paper was published. We've been on that journey to basically dismantle any kind of centralized entity that needs to control the ecosystem and allow it just to operate on its own. How do you do that? From a technical perspective, there's lots of different things to do. I think one of the biggest considerations, not just for Bitcoin, but for crypto as a whole, is bridges, moving assets between blockchains is not only one of the biggest kind of points of security risk, as we've seen in the past with multiple bridges being hacked, but also decentralization risk as well. There's so many projects and new chains that have launched where the bridge is literally a custodian. It's a multi-sig wallet where you are sending your funds in, they're being locked in this wallet that someone else controls, and then you're trusting that the asset issued on their chain will always be redeemable for the asset that you deposited into their multi-sig. And we've seen in the past that isn't always the case. So how do you solve that problem? With more expressive blockchains, there's now loads of innovation in zero knowledge proofs to be able to allow you to make more trustless bridges. Bitcoin lacking the programmability of some of those chains, it makes it way more challenging. And that's one of the biggest challenges that the Bitcoin DeFi industry as a whole has been trying to solve over the last few years. It's how do you create that trust minimized, or ideally one day completely trustless bridge between Bitcoin and another chain? I think the approach that Rootstock has taken, and lots of the core contributors who work for Rootstock Labs and like kind of wider contributors in the ecosystem, they talk about it as a kind of defense in depth approach to security. So what originally like 6-7 years ago emerged as the primitive thing I just talked about, a multi-sig, has now evolved to a pretty complex bridge where no centralized actor can control the funds that are moving in between Rootstock and Bitcoin. This is done in like, as I talked about, like multiple layers of security. I think what's really interesting is there are 9 trusted organizations around the world, including the likes of Zappo Bank, who hold these hardware security modules. Each of those hardware security modules contains a private key for a multi-sig wallet built into Bitcoin that allows transactions to flow in between the Bitcoin main chain and Rootstock, the side chain or the DeFi layer of Bitcoin. Those hardware security modules are completely tamper-proof. No one can access the private keys inside them. They're geographically dispersed around the world in data centers. And not only that, there then needs to be a cumulative amount of actual hash power from the Bitcoin miners to sign the transactions that flow in between Bitcoin and Rootstock. So you're then basically abstracting like no one knows the private keys for the network. The hardware security modules cannot be compromised by anybody. And then there's a final fallback mechanism. So if some catastrophic event happens that probably will be worrying more about where our Bitcoin is, there's an emergency time lock that basically then releases all the Bitcoin in the network back to the people who deposited it in the first place. So worst case scenario, people get their Bitcoin back from the DeFi protocols inside Rootstock. Best case, and I mean, the bridge has been live since 2018. It allows this trustless flow of Bitcoin. And then once you move your Bitcoin into Rootstock, that's where it can then be, it's like DeFi ready. So in the same way you do with Ethereum or any other asset, you can start deploying it into liquidity pools, you can start earning yield on it, you can start getting loans against it. And that's a really powerful thing because then it basically means you don't need the other tokens. You can use Bitcoin as the asset to access all the same kind of DeFi that you used to on multiple chains with similar trust assumptions, which is really cool. I went a bit deep there. Sorry.
No, I appreciate it. We like getting technical on the investor stage. You mentioned bridges specifically and kind of Rootstock's security measures there. In terms of, I guess, connecting Bitcoin to the broader crypto economy, how is that, with bridges, with other things, how has that improved recently? Where do you see that going? Why is that important for institutions?
Yeah, so I think one thing that's really interesting that happened, I think in October 2023, a researcher called Robin Linus published a white paper called BitVM. And the idea was to be able to compute anything on Bitcoin. And this has kind of given birth to multiple different teams working on this solution. And BitVM allows you to basically do zero knowledge proofs on Bitcoin to have much more trust minimized bridges in the future. It's very early stages, but I think this is like something that Rootstock Labs and the BitVMX project, but also lots of other different teams, guys at Starknet, lots of other projects are working on basically cracking this. And if you can do this, you can create an even better bridge to Bitcoin that has ever existed before, which I think is going to be really important for like kind of evolution of how people think about bridging into Bitcoin. I think that's going to make a big difference to like that challenge. I think there's also like a lot of proposals to Bitcoin Core. So like, despite many people seeing Bitcoin as this like fixed thing that never changes, it does change very slowly. There are dedicated contributors who are like working on introducing new Bitcoin improvement proposals to the network. There's many proposals live at the moment that would allow for better bridging in and out of Bitcoin, potentially more programmability of Bitcoin and lots of other improvements as well. I think one of the reasons why the core devs of Bitcoin are so hesitant is because it's such an incredible, like, the system is so simple and powerful in the way it is. People are very reluctant to make changes. Like 10 years ago, there was loads of BIPs being implemented into Bitcoin all the time. But as the network has grown and the importance of the network has grown, people are much more like hesitant to introducing new things. But it does happen. I think there's things like Opcat, BIP 300, which is by a guy called Paul Sork, which is basically a drive chain proposal to Bitcoin. All of these different technical things will make Bitcoin, well, it kind of, as I talked about before, there could be a world where like all roads lead back to Bitcoin. Bitcoin is the core asset. There can still be tokens built on top of the Bitcoin network, but the the proof of work of Bitcoin and Bitcoin as the asset starts becoming increasingly important. And I think we'll continue to see that in the coming years.
Yeah, definitely. So we've talked about security, we've talked about bridges and innovations there. You mentioned regulation a little bit. Definitely in the US is shifting or has shifted, is starting to shift. We'll see. I don't want to get too speculative, but as we only have a couple minutes left, looking ahead into the rest of 2025, what innovations do you think institutions are going to start to adopt? How do you think they're going to start to either change or shift the way that they think about their allocation to Bitcoin and DeFi?
Yeah, it's a really good question. I think the first step that still hasn't become widely adopted is institutions considering Bitcoin as a piece of their treasury. Larger organizations obviously do not hold all of their assets in cash, and Bitcoin should be seen as an asset that could be adopted as part of a sensible treasury management program. I think beyond that, and this is where maybe we go further on, it's then how do you turn that Bitcoin into a productive asset, not just a store of value? We're already seeing some of the kind of front runners doing this already, but I think this will become way more common to understand can I get a loan against my Bitcoin to fund expansion into a new market? Can I generate a sustainable yield in my Bitcoin and then maybe pass some of that savings and the value of that back to my customers? These are the kind of things I think institutions will start thinking about. The reason I use sustainable as a word there is there's already a lot of projects out there promising sometimes astronomical yield on Bitcoin. And the big question is always, where does that yield come from? I'd love people in the audience to tell me where your yield comes from, because I think it's a very complex subject. And I think that a lot of people are making very bold promises about the kind of yield they can deliver on assets that already appreciate an astronomical value when you think about Bitcoin as an asset. And that's something that there's going to be a lot of focus on. It's understanding where does this sustainable yield come from? So a lot of companies thinking about yield generation strategies. And I think also maybe this goes back into collateralized loans, but I think the US government already talks about this, or I think maybe Michael Saylor proposed it for the US government, is issuing basically gold bonds, but Bitcoin bonds to be able to raise money for the government or an institution is another thing that I think people will start seeing Bitcoin as the potential to do that in the same way we did gold for the last 3,000 years.
Everyone wants yield. I think we know that. And then really quick, just Rootstock in 2025. Can you tell us anything? What are you guys working on? What are you excited about?
Yeah, it's really interesting because I talked about before, this new wave of entrance into the Bitcoin L2 market kind of validated our thesis of Bitcoin becoming kind of critical infrastructure for the future of finance. And as a result of that, we've seen a wave of a lot of inbound inquiries from institutions around how to put their Bitcoin to work, managing those solutions. So thinking this year, there'll be a lot of big announcements around how more institutions are harnessing the power of Bitcoin's DeFi layer, Rootstock, to actually be able to do more with their Bitcoin as an asset. We've been working really closely with a company called Fairgate Labs on BitVMX, which is, as I just talked about, a way to build better bridges to Bitcoin. We have the Union Bridge coming to Rootstock, which will be using this BitVMX technology to be able to create a more trustless bridge between Bitcoin Core and Rootstock. Last year, we saw a wave of kind of blue chip Ethereum protocols like SushiSwap and Uniswap integrate Rootstock. I believe that trend will continue over the next year as well. And then finally, I think one of the things that I'm super excited about seeing in Rootstock in general is this wave of new builders. We're almost seeing a bit of an exodus from Ethereum. People realizing I can now do the same thing or build the same thing or launch the same project that I was on Ethereum on Bitcoin using Rootstock. We already saw the trickle of this at the end of last year. We saw a lot of kind of new builders and projects coming into the ecosystem. We saw more established projects building on Bitcoin using Rootstock raise capital from a load of big established VC firms. I think we'll see that trend continuing, and we might even see the first kind of super consumer-facing mass adoption of Bitcoin DeFi by a wider audience, and that will not only be institutions but also kind of mass market as well. So looking forward to seeing that.
Yeah, watch out Ethereum. Thank you so much. It was really a pleasure, and thank you guys.
Thanks a lot.